Ladies and gentlemen, good day and welcome to JD Cables Limited H1 FY26 earnings conference call hosted by Equibridges Advisors Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Chandni from Equibridges Advisors Private Limited. Thank you and over to you, ma'am.
Thank you very much. A very good evening to everyone. Welcome to the H1 FY26 earnings call of JD Cables Limited. From the management team, we have with us Mr. Piyush Garodia, Managing Director, Mr. Rajesh Jhunjhunwala, Whole-Time Director, Mr. Abhishek Gupta, Manager, Accounts and Finance. We will have opening remarks from the management team, post which we will open the floor for Q&A. With that, I would like to hand over the call to Mr. Piyush Garodia for the opening remarks. Over to you, sir.
Thank you, ma'am. Good afternoon, ladies and gentlemen. It is my pleasure to welcome all of you to JD Cables Limited first ever earnings conference call. This is a proud and memorable moment for all of us, not only because it marks our inaugural con call, but also because it follows the remarkable milestone of our successful IPO, which saw an overwhelming response and got subscribed more than 128 times, and we received subscription worth more than rupees 8,100 crores against the issue size of 96 crores, followed by successful listing on BSE SME platform. I want to begin by expressing my sincere gratitude to our shareholders, investors, customers, partners, and all stakeholders. Thanks for the trust you have placed in our company. Your support reinforces our commitment to delivering sustainable value and strengthening JD Cables' position in India's power infrastructure landscape. Before we discuss the financial performance, I would like to give a brief overview of our company. We are an ISO certified and BIS certified manufacturer of LT-AD cables, LT-XLT, and PVC power and control cables, and aluminum conductors, including AA/AC, AAA/AC, and ACSR conductors. With two modern manufacturing units in West Bengal, equipped with advanced machinery and in-house testing labs, we cater extensively to the power transmission and distribution sector. We are an approved vendor for multiple state electricity boards across more than 10 states, with a strong and growing presence pan-India. The first half of financial year 26 has been an encouraging period for JD Cables, where we saw total income grew 13% year-on-year basis to 121.44 crore. EBITDA increased 25% year-on-year basis to 19.24 crore, with margins expanding to 15.85%. Net profit rose 16% year-on-year basis to 11.92 crore, maintaining strong profitability at 9.82%. Operationally, we achieved several strategic milestones during this phase. Acquisition of a new industrial facility in Dankuni, Hooghly, spanning 118,000 sq ft, which enhances our production capabilities. Order books stands at a robust rupees 286.21 crore as of September 30, 2025, about 2.36x H1 revenue, providing strong visibility for the coming quarters. Vendor approvals from key states, Himachal Pradesh and Punjab, significantly strengthening our reach in northern India. We have also placed a rupees 5.72 crore machinery order for our conductor division to support capacity expansion and faster delivery timelines. These achievements reflect our focus on strengthening operational efficiency, expanding our geographical footprint, and scaling our manufacturing capabilities to meet rising demand. These numbers highlight both the scalability of our business model and the solid foundation on which the company is progressing. Looking ahead, we remain focused on scaling capability across cables and conductors to meet the rising requirements of distribution and infrastructure projects, strengthening our state electricity board network across additional states to unlock new markets, optimizing working capital and supply chain efficiency aided by proceeds from the IPO, leveraging government-led power distribution and transmission investments, including RDSS and major grid expansion programs, enhancing automation, improving product quality, and pursuing new generation cable technologies aligned with sustainability. We are aggressively expanding our presence in EPC projects and have created a dedicated EPC division headed by Mr. Rajesh Jhunjhunwala, our whole-time director, which will provide a strong forward integration advantage. We are targeting an order book of rupees 1,000 crores by FY26-27. We have already participated in tenders aggregating approximately rupees 60 crores and are awaiting the results, and we will be bidding for several more such contracts in the coming days. With a strong order book, expanded capacity pipeline, and increased geographic reach, we believe JD Cables is well positioned to accelerate growth in upcoming periods. Before I conclude, I want to thank our customers, suppliers, and employees for their unwavering commitment, and our investors and shareholders for the confidence shown in our vision. The successful IPO and our strong H1 performance mark the beginning of an exciting new chapter for JD Cables. Thank you once again for joining us today. We are now happy to take questions from participants.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rahul Kothari, an individual investor. Please go ahead.
Good evening, Piyush. Congratulations on a good set of numbers and a successful IPO. So a few questions I have. What is our model in terms of whether we are supplying directly to the government or is it through subcontractors or EPC companies? And second, what is the margin profile between cables and wireless? What is the EBITDA margin there? And in the aluminum conductors?
Good afternoon, sir. First of all, we are majorly supplying to EPC contractors, and we are also participating in tenders, direct government tenders also. We are aggressively participating right now in government tenders for supply of cables also. And margin will be explained by Mr. Abhishek. For cables.
So for FY25, we did an EBITDA margins of 13.62%, and for half year FY26, our EBITDA margins are around 15.85%, and our PAT margins for FY25 it was 8.84%, and for half year FY26 it's 9.82%. So, sir, the margins are cumulatively for the entire business and not separately for cables or conductors.
Okay, thank you, sir. And one more question regarding this expansion of Dankuni facility. So after the installation of, let's say, all the machinery and the setup, what will be our peak capacity? Because right now, I think we are already exhausted. The current facilities, we are already producing 78% of the production capacity. So what will be the peak capacity and how much revenue we can generate by expanding into this facility?
You're asking about the current facility or the newer facility which we will going to expand?
The newer facility.
So newer, we will be expanding in phased manner. As you can see, we have ordered the plant and machine for our conductor division at first. So when the conductor division will get installed, then the cable division will come up. So we are expecting the conductor division will be installed in December only. So we will be getting the handover for property on 12th or 13th December, and we have already placed the machine, and by that time all the machines will be at our place only, and we are trying to start the conductor division within December or maybe in January first week, and then after that we will be installing our cables machinery and going forward, as you asked, the capacity within March 2026, we will be doubling our present capacity to it will be 2x our current capacity, And after that, we will we are targeting around 4 to 5 times expansion within the next 2 to 3 years.
Okay. So that's great to hear. So we can
Thank you.
expect significant growth in the coming couple of years.
Yes, sir. Definitely. Definitely.
Thank you so much.
Thanks.
Thank you. Before we take the next question, a reminder to all, you may press star and one to ask a question. The next question is from the line of Sahil Garg from CCV Emerging Opportunities Fund. Please go ahead.
Hi, sir. Good afternoon, and thank you for giving the opportunity. Sir, I have two questions. My first question is, once we have this capacity doubled by March 2026, so how the utilization levels would look like on a year-on-year basis? And my second question is that do we also have any plan to enter into OPGW wires?
Yeah, that's also a good segment, but right now we are focusing on the present transmission and distribution sectors at present, because we already have so much lots of order book, and we are expecting a good orders in upcoming months also. And as you said, OPGW, we will be definitely looking for that sector also once we install this plant and machinery gets installed, and we have good order book coming, and then we can in future we will definitely look for OPGW cables also. It's a good market.
Okay. I guess my first question is still not answered, sir.
Yeah.
If you can provide clarification on that.
Can you repeat the first question?
I was asking that what would be the utilization levels once we have this 100% capacity as mentioned by March 26, like how the growth would be done around in FY27, FY28?
Yeah. I think by the end of September, we will be in 80% capacity. You can say it will be in 80% capacity within September, next September.
80% would be the utilization levels, you are saying?
Yeah.
Of the total capacity, new plus old?
Yeah. Yes, sir.
Okay. And what kind of revenue we can expect from that 80% utilization?
As I said, we are planning to double the revenue of after March 26. We will be we are planning to double the revenue in the next financial year. We are targeting.
Okay. And would the margins remain same, or it would improve, or
I think it will remain more or less same only, because going forward we are also adding new products also in that facility, HTLS conductor, MVCC, AL59 conductors, and also 11 kV cables, ST cables, etc. We will be adding new products also in that that unit.
Okay. Thank you, sir. That's it.
Thank you, sir. Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and one. The next question is from the line of Tanmay Bhatt, an individual investor. Please go ahead.
Good afternoon. Hello. Am I audible?
Yes. Good afternoon, sir. Yeah, please go ahead with your question, sir.
Okay. So the order book stands at 286.21 crores as of September 25, right? What proportion of this is expected to convert into revenue in H2 FY26 and FY27?
I think so. The projects are generally ordered to contractors in say 24 months, 18 months, 36 months. So there are lots of orders which are of 18 months, 12 months. So we are expecting this to be completed within 1.5 years.
Okay. So you can highlight on the top line and bottom line of the company revenue impact
Revenue impact,
for
sir,
FY
for
27 and 28.
so we are targeting at least 500 CR in the next financial year, 500 to 600 CR, and 1,000 CR in the next 2 years. And
Okay.
with more or less same PAT margins.
Okay. And you secured vendor approvals from Himachal Pradesh and Punjab, right? Like, how
Yes, sir.
do these new approvals change the revenue of the company and margin?
It's just a geographical expansion because as we will be expanding our facility and we will be like doubling our capacity. So we will be needing for the more pan-India basis, we want to be present in pan-India basis. So, and we, as I said earlier, like we will be exploring newer products. So we are expanding to Himachal Pradesh. Then we will be also like we are expanding into Rajasthan. We have already got the approval in Punjab. So it will definitely help in getting like orders of newer products from these new regions. And like as we scale up, it will definitely help in like procuring orders from there also.
Okay. And are there any EPC plans in
Yes.
the near future?
Yes, sir, definitely. As I said in my opening speech, that we have already participated in tenders worth rupees more than 60 CR, and we have already working on several other projects. We are which is headed by Mr. Rajesh Jhunjhunwala, who has around 30 years experience in this field. So and this will definitely give us a forward integration advantage, and we are like looking quite aggressively to this EPC line as well.
Okay. And what was the CapEx spent during H1, and like what is the full year CapEx plan?
So 16.45 CR to be precise, we have already spent on the existing facility, including the land and building cost and the plant and machinery cost, and we will be like further spending around 6 to 7 CR in the upcoming few days only for the cables division.
Sir, Abhishek from management side. Sir, so for the half year till September, we didn't did a major CapEx. Our CapEx was done in the month of October and it's continuing in the second half of the year.
Okay. And one more thing, the capacity utilization is already 79 to 81% in both the units. So will the company consider a further capacity expansion beyond the Dankuni facility?
Yes, sir. We have already purchased a newer facility of 118,000 square feet, as I said in our opening speech, and we have already placed the orders of plant and machinery. So we are expanding in that facility.
Okay. And as you just mentioned regarding that Himachal Pradesh and Punjab, are there any additional major states in the pipeline for the vendor approval?
Yeah. Yes, like as I said, Rajasthan, there is 3 discoms, Jodhpur and 2 other divisions are there. So discoms are there. So we are like we have put the files there also. So we are expecting the approval to come very soon.
Okay. And as you are expanding further in different states, like in which state do you expect the better PAT margin?
So it's not about the better PAT margins. It's about like we want to be present pan India, so that like suppose there are several projects going on. Suppose a good inquiry comes from a deputed client. We don't want to miss that opportunity. That's why we are expanding to pan-India level, so that we don't have to face any problem in the near future that we lose order just because we don't have a vendor approval. So that's why we are expanding to pan-India basis.
Okay. Okay, great. Thanks a lot.
Thank you. Thank you, sir. Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and one. The next question is from the line of Rahul Kothari, an individual investor. Please go ahead.
Hi. Just a follow-up question. So, just wanted to understand that the products we are manufacturing are they primarily related to the electrification thing, or are we also doing something on the like home usage or like, for example, data center? Is there any data center opportunity where we can provide our cables?
Yes, sir. Again, a good question. So there is lots of opportunity in data center as well. We will definitely like to explore data center and solar cables in the near future, and very soon. And yes, our products are being used for electrification only, for transmission and distribution. First, the you have to transfer the electricity to transmission through which is done through conductors, mainly from conductors like ACS conductors, and then after that we do a distribution through AL bench cables, and like also power cables are being used, control cables are used in the substations line.
But we have the capability and capacity or the, let's say, expertise to go into these data center
Yes,
opportunities as well, right?
yes, sir, definitely. We can manufacture, and we have the qualification also. We can easily manufacture. It's just a copper cables which are mainly used, and we are planning very soon to enter that segment also. And going and I missed your houseware question. And like houseware is again a completely different sector. There we are planning to enter through distributorship, like all the big companies are doing, and we will we have plans to enter houseware segment also in the near future.
Thank you. That's great to hear.
Thank you, sir. Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and one. The next question is from the line of Rupesh Thakur from JSR Investments. Please go ahead.
Yeah. Thank you, sir. So my question is regarding the raw material. So in your raw material, mainly aluminum and copper are there. So regarding the price volatility, have you implemented any hedging or pass-through clauses? And what is the impact on the EBITDA margins if the raw material prices goes 5 to 10%?
Sir, can you repeat your last line? What will be the...
Yeah. So my question is, if the raw material prices increases by 5 to 10%, what will be the impact on the EBITDA?
First of all, all the major projects which are going on have PV price variation clauses in the government tenders, because it's not possible for the contractor to work in at the same price for the next upcoming 18 months or 24 months. So normally all the major contracts are having price variation clauses. So where we raise debit note or credit note depending upon the LME prices of the raw materials.
Okay, understood. So basically our EBITDA margin is very, very sustainable in this matter.
Yes, sir. We are also keeping the track of prices, and we ensure we maintain sufficient inventory levels, and we have strong relations with several suppliers. So we negotiate competitive price always from them.
Okay, understood, sir. And regarding the order book, so your order book stands at 286.21 crores as of September 2025. So how much of this is executable by March 31st, 26? And what is the expected conversion timeline?
Yes. So as I said, like all the 10, the 286 crores comprises of several orders. Like, say, some are of 12 months, some are of 18 months, depending upon the contractor's requirement, they ask to supply the materials. And like, this figures constantly change. Like, suppose we got a 5 crores newer order, and then we have executed, suppose, 10 crores earlier orders. So it keeps on changing.
Okay, okay. So, and from the investor presentation that you got new vendor approval from Himachal and Punjab. So
Yes, sir.
what is the expected annual revenue potential from these two states? Means how soon we can expect any order inflow?
Order inflow can be expected in the upcoming, say, 1 to 2 months. And like, it depends again, it depends upon the requirement of contractor. And basically, you will see the effect, a more prominent effect in the, say, upcoming 12 months to 12 to 14 months, you can say.
Okay, okay. So are there any delay in the government payments, means since your government payments and all?
So we are mainly supplying right now to major EPC players, and like, we have good understanding with them, and like, some of them are quite a big names. So we are supplying regularly to them, and like, suppose if the delay may be, say, 10, 15, 20 days, like, but not
Okay.
a major delay normally.
Okay, not a major delay. Okay, because
Yes.
I was asking this question because the trade receivable increased to
Yes.
around 68 crores, if I am right.
Yes, sir.
So, okay. So if I think so in the coming 2 to 3 years, your internal accruals is enough. So there is no need of any equity infusion in the future.
So we will be needing, we may need equity in the for the like, for the 6 months, or let's say
Okay.
1 year basis. Because we are expanding to, like, EPC contracts as well, where there will be a fund requirement. And if we win, like, say, a good sizable amount of order, we will be needing a like, sizable amount of capital for executing those projects.
But in the EPC business, it's already very cluttered now, very, what we say, already there are a lot of players in this segment.
No, so it's like, see, so see, competition is already in each and every segment, sector, there is a competition. And like, if you see the major players like KEC, KSC, Polycab, and then here Calcutta based, there are many companies like Laser, Lumino, and Capcom. All are into manufacturing cables, as well as they are taking the EPC project, because it gives you the, like, forward integration advantage.
Okay, understood. So along with applying for the tender for the wires and cables, we can apply for the EPC tender also.
Yes, sir. Yes, sir.
Okay. So any future expected revenue from this segment in the coming future?
So we are like targeting 1,000 crores or order book in the upcoming, say, 2 years.
In the 1,000 crores in the 2
Order
years
book, yeah. Yes.
order book.
Yes.
Okay. That's good. That's okay. Thank you, sir. Thank you so much for your patience.
Thank you.
And,
Thank you, sir.
yeah, and all the best for the coming years. Yeah. Thank you.
Thank you very much, sir. Thank you.
Yeah.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1. The next question is from the line of Ishima Bansal from VentureX Fund. Please go ahead.
Hello.
Yes.
Yeah. Yes. Hi. I just wanted to get an idea on the total CapEx that we expect to do to achieve a revenue of 1,000 crore in next 2 years.
Goes in, you want to know the CapEx?
Yes, the total capital expenditure that we can infuse in the business to reach a revenue of 1,000 crore. Right.
Yes, sir. I'll explain you. Like, suppose right now we have already done a CapEx of, say, 16.45 crores. We are expecting to do a CapEx of, say, 7 to 8 CR right now, and it will turn to 25 CR, and we are expecting it, like, our cables division to, like, cable and conductor division to double the revenue by the next. We are targeting to double the revenue from our cables and conductor division to in the next financial year, say 600-700 CR. And then we are also we are expecting a good number of, like, say 400-500 CR, like, in the upcoming years for the EPC division. Say you can expect like 150 CR. We like 30%, if you assume that 500 crores projects require 30% capital requirements, it will turn to 150 CR, and like, say 25-30, like, sorry, 10 CR approx for this, like, cables and conductor division. So you may expect like 160-70 CR to be like, we will be needing 160-70 CR to achieve a target of 1,000 CR.
Got it. And sir, as you mentioned that we will be entering into the EPC segment, so basically what kind of EPC work will we be doing? Like underground cables, transmission cables, or we will be also manufacturing the substations? What kind of EPC will we be doing?
So I think Mr. Rajesh Jindal, who is full-time, he will explain clearly.
Yes, sir. सर इसमें हम लोग ट्रांसमिशन भी रहता है, डिस्ट्रीब्यूशन से ट्रांसमिशन हम लोग इसमें हम लोग सबस्टेशन भी बनाते हैं, और ट्रांसमिशन से और डिस्ट्रीब्यूशन में हम लोग लाइन डिस्ट्रीब्यूट कर रहे हैं 11 kV to 33 kV में, ठीक है ना। और अंडरग्राउंड केबलिंग का भी अभी प्रोजेक्ट सब आ रहे हैं, तो वो अपने जैसे सिटीज में ये सब में लगते हैं अंडरग्राउंड केबल, तो वहाँ के मौके भी देख रहे हैं।
सर अभी हमने कौन से स्टेट के लिए अपने टेंडर अप्लाई किए हैं? 60 CR के टेंडर्स वी हैव
we cannot disclose it right now.
अच्छा,
because it's in the execution part only.
ठीक है। And sir, moving forward in next 2 years, 1,000 CR में से how much revenue do we see from our EPC business in FY27?
In FY27, they're like 300-400. So it's again, it depends upon the order we achieve. Like, say, so we are like most of the tenders are coming in January, February, March period only. So it depends upon the order book, like how much orders we get. Still, we are targeting around at least, say, 150-200 CRs, like revenue to be booked in the next financial year, and after that, like major 500-700 CR.
Got it. And what margins can we expect in our EPC business? Bottom line margins?
So it's around like 7-8%, 9%. It should remain in that range only.
Okay, got it. And sir, one last question on the growth that we can expect in FY26. What numbers can we expect in FY26?
So we are targeting around 350, 360 CR like revenue in this financial year.
Okay. And how much of this revenue will be contributed from our new facility, the new plant that we have just bought?
It's around say 50-60 CR.
Got it. Okay. Thank you so much, sir.
Thank you.
Wish you all the best for the business.
Thank you. The next question is from the line of Dia from Sapphire Capital. Please go ahead.
Hello, sir. Am I audible?
Yes, ma'am.
Yes, sir. So what kind of margins are we expecting from the EPC division?
Ma'am, we are expecting that these like 8-9%, from something sort of 8-9%.
Okay, sir. And what kind of EBITDA margin for this year, FY26?
EBITDA margins should remain this around 15% or 16%, like something like that only.
And next year also similar?
Sorry, ma'am?
And for FY27, we can expect a similar range?
Yes, ma'am. We are expecting like it should remain like the same level.
Okay. And last time you had mentioned the RDSS 650 TR order. So where are we on that right now?
So RDSS, sorry, ma'am, which order? RDSS?
Mizoram order, we were expecting like a 200 CR EPC order from that.
Yes, ma'am. We, as I said, like we are expecting the tenders to come in the upcoming months, in this, say, in December, January, when the tenders will be floated, and we are actively participating not only in Mizoram, we are actively participating in several states. So we are expecting a good order book from the EPC division as well.
All right, sir. Thank you so much.
Thank you. Thank you. Thank you.
Thank you. The next question is from the line of Neelam, an individual investor. Please go ahead. Neelam, your line is unmuted. Please go ahead.
Hello.
Yes, ma'am. Please go ahead.
Good evening, sir.
Good evening, ma'am.
So my first question is, the new Dakuni facility spanning 1.18 lakh square feet is a major milestone. How should we think about the ramp-up timeline? And when does it start contributing meaningfully to volumes and EBITDA?
Ma'am, it's starting in a phased manner, like as I said, in December ending, or by say January 1st week, we are expecting to start our conductor division, and then gradually our cables division will be starting, and like we are expecting like then we can definitely in future we can definitely ramp up to 4x, 3x, 4x in the like near future, depending upon the execution and orders.
Okay. Hello?
Hello. Yes, ma'am. Please go ahead.
Yes. My second question is for the wire and cable industry is seeing aggressive scaling by several players. What specific strengths, operational or product level, are helping you win share in competitive tenders?
Can you again repeat your question?
The wire and cable industry is seeing aggressive scaling by several players. What specific strengths, operational or product level, are helping you win share in competitive tenders?
Yes, ma'am. Because several players are expanding, just because there is a huge demand of cables and conductors, so that's why. So gradually, if you see that like the demand will be more in the near future, and it's already the demands are very high. So the players are expanding their levels also. So it should remain at this level only.
Okay. Okay, sir. No, sir. Thank you, sir, and all the best. Sir.
Thank you. Thank you.
Thank you. Ladies and gentlemen, we'll take that as the last question for today. I now hand the conference over to Ms. Chandni for closing comments. Thank you, and over to you, ma'am.
On behalf of JD Cables and Equiprojects Advisors, I thank everyone for taking the time to join today's earnings call. If you have any queries, you can connect to us at info@equiprojects.com. Once again, thank you for joining the conference.
Thank you, ma'am. On behalf of Equiprojects Advisors Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.